the ingredients are in the soup, so to speak. The data's out there. There's no constraint on compute. There's no constraint on housing that data and turning it into information. All things that were part of the constraint model for up until probably the last, seriously, 5 years. So we're really at the beginning of this time where the things that would have normally prevented you from using that information to build product have gone away. A lot of the big tech companies do this, like breathing oxygen. I haven't seen a lot of it in our industry, and that's really the mission that we're on.
That's State Auto Chief Information and Strategy Officer Greg Tacchetti, and this is the future of insurance. This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com.
Greg, thank you for joining me for another conversation. I feel like I bother you every time I've got a thought, but I appreciate you jumping on it when I do.
Well, it's always a pleasure, Brian. Nice to be with you today.
So you're an interesting one for me because while you have CIO in your title, this is your first stint in IT, right? So you're more of the business guy. I mean, you've been in around different carriers, different functions, different major shifts in the business. So I love that perspective that you get to bring. We got lots of shifts going on today. I'm curious, what are you, from your perspective, both IT and strategy, what are you seeing as some of the major dynamics that are moving around today that are potentially shaking up the industry?
That's a great question. And with my strategy responsibility, it's something I talk with our leadership and board about quite frequently. My operating thesis is simply that our business, and specifically property casualty, is trying to assign rates to contracts to evaluate risk, right? And the better that you understand risk, the less opaque it is, the better you can price for it, and the more stable, hopefully, your thin underwriting margins can be. My operating thesis is simply that all of the data that is being generated in the world today, if used appropriately, will help pull back that curtain. The most obvious example that I use is telematics. If you think about auto forever being rated on age, gender, marital status, zip code, and type of vehicle symbol, those are all surrogates for what?
Yeah.
Where's the car? When's it being driven? How's it being driven? I don't even care who's driving it anymore.
Yeah,
right?
That's true.
And so that's just one example, but you see a lot of automation coming into the commercial space with building systems and sensors. There's a lot more data being generated than anyone's ever going to turn into useful information. But my belief is that the companies that have the antenna up to consume that information and the data architectures to house it and let your analytics teams perform analysis on it will find those nuggets and use that to create more intelligent products.
It's trying to get at what the exposure's actual behaviors are, and we really haven't had ways to do that before. And there's so much talk about predictive analytics the past few years, but you're still trying to figure out what the behaviors might be. But what you're talking about is new ways to actually see the behaviors in real time.
Yeah. We went through a project 20 years ago at Safeco that we took all of our claims data, which was kind of, with old legacy systems, not a whole lot better than, water, fire, and wind, categorization of losses. And we paid an offshore group to go through all the claims files. It took about 9 months, but we built, probably 30 different categories of loss specifics. And then when the property teams started evaluating that, they came back with like a bunch of ahas, one of which was, hey, a big driver of our water losses are washing machine loss, water feed pipes
Yeah.
breaking in homes where the washing machine is on the second floor. So they got that much more specific, and it started making you think like, well, what if we did this deal with Home Depot and just sent people steel braided cables?
Yeah.
Because you'd avoid so much loss. That was 20 years ago.
Yeah.
Now you think about the ability, like we partner with Flyreel at work to do inspections, where the policyholder downloads an app and does a visual inspection using computer vision tools to prompt the customer to show you those pipes, those feed pipes,
Yeah.
and to then prompt them to say, we'll give you a 10% discount if you replace those old plastic supply lines.
Yeah.
And or whatever it is, right? But you get my point. I mean, you're understanding risk in a more granular way. Nobody wants to have to be out of their house for a month when they have a massive water loss.
Yeah.
So it's a really win-win. You're helping educate the policyholder on the aggregate data of where you see losses and what they can specifically do to help avoid those.
Yeah, it's a good point. If you start to get into the behaviors, you can get to loss prevention instead of minimizing the scale of the loss, which is also a good thing. But no matter how much money someone gets for a claim, wouldn't they rather not have had that tree fall through their house, or their back is now messed up from that car accident or whatever, whether you paid for their car or not and all their doctor bills, I'd still rather not be in pain.
That is in a nutshell the irony of the product that we support and sell.
Yeah.
You're selling something that costs quite a lot that nobody ever wants to use.
Yeah. I do think it's one of the things, there are a few things, but it's one of the things that makes it hard in this industry, especially from my time in claims, when those calls come in, A, everyone thinks your carrier's your adversary and they're not actually going to stand by you. But B, it's a terrible situation. No matter how great everything goes, it's still a bad situation. So it's sort of like either I'm paying all this premium for nothing, or I got to use what I paid for, but it was terrible, even if it went well. So it's a tricky spot to be in.
Well, with your background, having seen that side of the business, I can tell you, it always starts out in an odd way, but the vast majority, 95+% of claims, whether that was GEICO or Safeco or my time at Fireman's Fund or even now at State Auto, the customer is really pleased with the experience, with the caveat that they didn't want to be going through that. But every time there's a weather event, we reach out to every policyholder in an area and ask them if they're okay.
Yeah.
Right. And we regularly see that feedback. Like, I'm glad I didn't have a loss, but I'm glad you knew I was here and cared enough to ask.
Yeah.
What we did at Safeco after Katrina in 05 is still kind of legendary in the industry. So, the vast majority of your clients, maybe because the bar is so low and they do think it's going to be adversarial, are really appreciative of how we sincerely want to deliver on that promise, that intangible promise that we'll be there when you need us. And I think most of the industry does a really good job in that respect. But there's all, the ones that get all the publicity are the Ballard cases with mold in Texas and things like that.
Yeah. The extremes on either side.
Yeah.
So I want to hit on a couple of things you said. You talked about, that bar being low. And I think that's one of the shifts we're facing, especially, it's not post-COVID yet, hopefully soon, but that has shifted so much in terms of the digitization that everyone lives with. And so that the bar of what they're willing to let slide has absolutely moved up. And you mentioned Flyreel and other similar situations where people can self-service. You guys in particular have been moving ahead of the curve on a lot of the cloud-based, the self-servicing kinds of things. Was that Flyreel example and others like it, were those a response to the fact that it was so much harder to have someone go out to the property and be inside the home, or bring the car to a facility that now is closed? Or were these things you guys were already working on because you were absolutely ahead of many carriers on moving to the cloud and a lot of the kind of modern ways of working that I think people are starting to embrace today because of necessity?
Yeah, we definitely were not 5 years ago when I got here. I think it's kind of a right place and right time story, Brian. I say State Auto is the right size company. We, normalized for some things that we sold, about $1.6 billion, $1.7 billion. We knew that that was this kind of tweener space that strategically was going to be really difficult to survive in. So we had a mandate from the board to get all 14 of our statutory lines modernized. We had a strong mandate from, the whole new leadership team that we were going to be all in on this. So it wasn't a piece of a much bigger company. And so we were big enough that we had enough capital to make this kind of investment, and small enough that we could really focus on this holistically and drive, many threads at all at the same time. And the culmination of that really was, the execution throughout the pandemic and, seamlessly shifting to work from home. But the broader strategic context is what I just mentioned. We presented, this is the fifth of a 5-year plan that we presented to the board to double the size of the company. And as you know, you could pick out on a couple fingers the number of companies that started at $1 billion plus in P&C and were able to double over a 5-year window. It just is growing in our business is very difficult. And so not only was that the plan that we laid out, and we're on pace to be a $3 billion company by the end of this year, we also wanted to do that in a way that was extremely, maybe extraordinarily efficient, productive. So we had 2,000 associates 5 years ago. We have just over 2,000 now, not even like 2,100, it's 2,000 and change. And, when salary and related is 2/3 of your operating costs, if you're able to continue to double your company and keep your staff flat, you're going to end up with a much lower expense ratio pretty quickly, which, as you know, is a direct element in getting more competitive rates into the marketplace. So if you think about all of the transition that we've been through, it was all lined up very strategically and thoughtfully to try and achieve this outcome. And so whether it was building a data lake, as a single source of truth, or all the moving finance and HRIS to Workday, all of that was all part of the broader scheme of automating just about everything that we could. We've got a fairly advanced RPA group right now that does a lot of process reengineering. Nothing that anybody hasn't done, but holistically last year, even with all the change that we went through, we saved another 100,000 hours in productivity. So it's doing a lot of little things well, that kind of landed with this digital strategy implementation. It's given us the ability now, with all of these processes digitized, to do different things. So to give you an example, last year we partnered with Amazon, right, just about a year ago, and kicked off a workshop around reimagining the agent CSR desktop with respect to servicing our accounts. And not only did we, shift to a work from home almost, right after that project started, it's our first truly cloud native application. It's going to replace some of the new legacy, the Guidewire front end on servicing. It has all of modern telemetry. So we just implemented voice activated IVR. We implemented a new agent internal CSR desktop that recognizes incoming phone number and floods all that information, so you don't have to say what's your name and go through a couple security validations. And again, this is nothing that a lot of companies aren't doing. And I think the core of your question is that bar really got a lot higher with customers in the pandemic, and I would wholly agree with you there. What we were able to deliver in the last few years, and specifically last year during the pandemic, was only because of a lot of other things that had been done over the last 5 years.
I want to ask about Amazon in particular, but I will call out, having lived through a doubling over 3 years, not from $1 billion to $2 billion, but from 400 million to 8 something. And any company I've gotten to watch do that through my consulting time, invariably they go in with the, we're going to double or we're going to do whatever and hold our staff or hold our expenses at X. And that really rapid growth, which is astronomical growth in this industry, to be sure, means you end up throwing people at everything.
Yep.
Or you're investing ahead on systems that as we've seen in this industry, a lot of the legacy approaches to systems take much longer, scope is much tighter, and the cost is much higher than you expect going in. I always say you're on year 12 of an 8-year or year 8 of a 3-year program. People
Yeah,
are like, is he dyslexic? No, it's the way it plays
that's
out.
kind of my joke.
Yeah.
These core systems modernizations. Like just say for personal lines, you go to your board and say, I need 300 million, and I'm going to do this in 3 years. And by the time you're done, it's 5 years and 500 million. And we, as you know, pursued a little bit different strategy with that de-risked it. But it's these are complicated projects, and trying to do all the integration with a bunch of legacy systems. It's usually a patch quilt of prior acquisitions, makes it even that much more difficult when you try to really integrate the two worlds. And so we went and just all in on the new world, and have continued just to automate and let the old world run off while we've built the new world.
Yeah.
But even there, I mean, with that data lake, we've got daily services coming in from the old legacy batch environment now. So even though we modernized the service delivery that I mentioned earlier, and we have real-time data coming out of the data lake and the new platform, we have at least, daily batch data on the legacy side that is something that we really never had exposed as artfully as it is now for our agents. So, I guess the biggest thing that I would tell anybody is get your data architecture right. Get your data lake or whatever your warehousing mechanisms are built so that you can serve up the experience that customers expect.
I think that's a critical point with how central data is to this industry historically, but especially to the tools going forward. Greg, I want to ask you about Amazon, because when we think about, and especially for what agent facing solutions, when we think about who do we turn to for that, there's two behemoths that own 80% or whatever of the agency management system market. Then you've got, Salesforce had the biggest show floor display of anyone at ITC in 2019. And that's, that's about sales. So that's what agencies are about. The company that doesn't come to mind is Amazon. And I'd say the same thing, Google has had some big announcements in the London market, in some other domestic carriers in the US. What does it take to partner with someone like that, or to even bring them into the equation? Did you consider any of the traditional, like, oh, these are the folks you go to in this space? How do you land on someone that is not front and center in our industry yet and do something pretty fantastic?
You mean with Amazon?
Yeah. Was it given that you were working with them, or was that an RFP? Like, how do you land on Amazon in that place?
Yeah, this is not going to be a great story for people that have to deal with normal. I used them at my startup, and I had never heard of them. This is going back to 2012. And they're one of the probably only, if not few, companies that I ever worked with that continually added, in an insane pace, new features and capabilities, and lowered their bill to me. So, every, as a startup, right, you're looking at pennies. And every quarter my bill went down as I put more and more load and sold more and more policies, which, was kind of antithetical to your normal thinking. And so I had experience with them coming here in 2015. And when my CEO pulled me aside to say, here's the plan I just presented to the board, can we do it? I looked at the scope of it and I said, well, listen, I don't really see how I can buy enough servers to have enough operating environments to deliver at this pace. Do you want me to put a business case together for you for Amazon, or do you just want me to go down that path and get it done? He goes, just get it done. That kind of set us all out on the path of all the development that we hosted in Amazon.
Yeah.
They came to us after we were out. I was in Seattle for 15 years, and then we went back out 2 years ago and went through a briefing and talked a lot about the importance of microservices and got some really good coaching from them. They came to us afterwards as just a value add service and said, we have this internal group, they call it their digital innovation workshop. And if you have a big enough, a meaty enough project, we would like to partner with you on
Yeah.
teaching you the Amazon methodology. They call working backwards, the two pizza teams, all the stuff you probably read everywhere else. But it's really this very customer centric way of thinking,
Yeah.
number one. And number two, with their AWS engineers understanding the way to put together a true cloud native application. And so that's what we worked on with them. Um, I think the team officially kicked off. We did a workshop for a day or something in December, but then by the time everybody got out of whatever they were doing and landed as a team together here, it was February. April, we had a working prototype. May, we had a bunch of agencies using it.
Wow.
And September, we hit our countrywide rollout on schedule.
Yeah.
And this kind of product team velocity is just very different than a lot of projects I've been associated with. I mean, for most people in this industry, that timeline I just laid out, you can be like, yeah, you can't really do anything with it.
Well, I would have stopped you and said, wait, what year was the?
Yeah,
Yeah.
yeah.
You're all talking about the same year and 2020 with everything
And
else going on.
complete infrastructure rebuild. And I don't mean Amazon. I mean
Yeah.
moving away from Cisco data to Amazon Connect on the call center application, moving away from Salesforce to Fresh Chat on the CRM side, moving to a new workforce management tool, Calabrio. So, I mean, it was a complete infrastructure rebuild that we focused just on our CSRs with our service team.
Yeah.
We're now pushing this out to direct to consumers so that not for sales, but so they can do
Service.
policy changes and billing changes themselves. We've added in all of the commercial lines that went in 2 weeks ago. So it wasn't just one little piece. It was architected in such a way that adding new components and capabilities becomes a lot easier.
Yeah.
And this is just this more product team mentality. They get up early and go to bed late every day thinking about how do I make. We did a persona called Susie Glenn, and probably homage to the late Senator John Glenn in Ohio here. But Susie was the persona of the CSR that everybody on that team was trying to think about when they were building product. And from here, and this probably gets to some other things about the future, we'll keep adding personas. As you know, and inside of agencies, there's lots of different jobs and people who service different clients and customers in very different ways. And we want to understand that very deeply. We want to use a lot of the predictive analytics or machine learning that we're gaining from this new asset to increase the personalization. And at that point of truth, at that CSR talking to a client level, really support their needs. And that's when I talk about it's a joke internally. Our CEO, when he's talking to agents, a lot of times will say, we don't send paper bills anymore. We're all digital. And then I usually give him a hard time about that, because that's just like a silly example. Thinking digitally is thinking about how I consume that data and change experiences. And a lot of the big tech companies do this, like breathing oxygen. I haven't seen a lot of it in our industry, and that's really the mission that we're on.
I love that. How you consume data, not just what paper is still around that we can get rid of.
Right.
It's more of a strategic question, problem first.
Yeah. And the problem is, how do you exceed people's expectations with whatever your product offering is?
Yeah. So you mentioned the future. I want to get into that because you were ahead of the curve in a lot of respects on the move to the cloud and microservices and a lot of the things that you've done over the past few years, and the proof's in the pudding. You should have had double the staff, even despite the intentions. So the fact that you pulled off the numbers that you have, and that people didn't, walk out in droves because this is too much change, I can't deal with it. You did it in a way that was also livable and acceptable to the staff. And, that's a whole other conversation we can get into. But where do you see things going? Whether it's a year, 18 months, 20 years, I think it's easier to predict 50 years out.
Yeah.
Being short of that. But I'm really curious about, what do you think are the dynamics our industry is facing, or maybe the problems that we haven't yet solved for that are still flying around today?
Yeah, I think about that a lot, particularly when you look at the dynamics in a lot of other industries and how they've been disrupted through a lot of these new technologies. And I mentioned, the ability to understand risk in a more granular way. Well, just take a big step back and look at our industry, right? What, 2,600 companies defies reason, right? I mean, there's not an industry pattern like this in any other industry. You have a new technology, say, 110 years ago, auto manufacturing. There was 300, 500, whatever it was, auto manufacturers, but pretty quickly the pattern, the 80%, 70% of the market, consolidates into the top five.
Yeah.
That's not an atypical pattern. That has not happened in insurance, number one. Number two, you look at the cost of us delivering the product, and I'm just talking about the general expense side here. So commissions, salaries, real estate, taxes, all of that stuff is, on the order of 30%. So 30 cents on every dollar we collect goes to overhead, basically. And that's not even counting the other, whatever it ends up being, 12, 15 points to actually adjust the claims.
Yeah.
So, when you think about numbers like that, and I think about how data and use of data has transformed things all around us, I wonder, is there not going to be a better way to pool risk and sell off slices of it and cut out the carrier side of this? And really, if you think about what we do is really just trade our capital for risk.
Yeah.
Right, on a contract basis. You could easily envision through technology pools of capital being put at buying slices of risk that's aggregated, and then you have to figure out who's going to be the last mile in the claim servicing, which you could very easily envision whole companies just specializing in that component.
Yeah.
And with enough data, I mean, the whole element in our industry forever, right, was, have your claims people on staff unless it's too remote, because independent adjusters cost too much and their average losses or, payments are too high. Through data, that's all very transparent now.
Yeah.
And that's just one example. You could easily see with Tesla now. The insurance actually being built into the price of a product.
Yeah.
Right. You can see that coming along, and maybe that's because customers don't care about the product. And I don't mean that in a bad way. It's just, you don't think about it. So it's a low emotional product category. It's not like your iPhone or your car or something that you have an attachment with.
Yeah.
You just don't, as a reasonable adult that you have to have it.
Yeah.
Whether the bank tells you or your Department of Insurance, but you also know that you don't ever want to use it. So, in my argument, has been the amount of money getting spent on branding and advertising in our industry, to me, is largely wasted. Because I was at GEICO for 5 years before all that cable started, and I was there 5 years after, and it's a very recognized brand now. But if somebody said I'm going to embed the insurance into the cost of the car and I don't need to think about it, whoa, how many people are going to go, whoa, no, I like GEICO, I'm not moving I just don't think that people feel that way.
Well, it's interesting. You look at the subscription services from automakers, and this week BMW and Audi both shelved, or they said they ended the pilots, and they were always meant to be pilots and not live on, but regardless, they ended their programs in the US. I know the BMW one in the article I read was like $2,000 a month. And it included everything. Didn't include gas, but maintenance, insurance, and the car. And you could flip it anytime you want. And Porsche had one, and Volvo seems to be the most successful. GM shut theirs down, but they all included insurance. I go back to the music industry. When the iPod was first coming out and the competition was Rhapsody and Microsoft Zune, and those were subscription and claimed, this is the path forward, and they failed miserably. But today, everything's subscription.
Yeah.
So while we see these car subscription services failing, and frankly, $2,000 is a ton, even if it ends up being a good deal, it's still a ton of money. So
Yeah.
maybe it's just our comfort with it isn't caught up yet, but maybe one day. And then what does that mean? I think
Yeah.
you're right.
Timing's everything in life.
Yeah, it may be
Yeah.
far too early
I
for that
mean,
market.
the example with putting licensed agents in auto dealers, right? That's been tried 100 times, and I'm probably underestimating by a factor of 10.
Yeah,
Uh,
there's
but
a
no
new
one wants to.
insurtech startup that's
No
doing
one
it.
wants to do it. They're like, I already have insurance. I don't want to have this conversation.
Right.
So it's not. I don't know. The larger point is, I think the ingredients are in the soup, so to speak. The data's out there. There's no constraint on compute. There's no constraint on housing that data and turning it into information. All things that were part of the constraint model for up until probably the last, seriously, 5 years.
Yeah.
So we're really at the beginning of this time where the things that would have normally prevented you um, from using that information to build product have gone away. We were talking about APIs earlier. You go back, whatever, 40 years, you talk about old EDI between companies and, and that, bring that forward to, these modern microservices. The level of integration between companies is going to continue to increase.
Yeah.
And I think there's going to be more of a sorting out. If you're kind of hanging on by your fingernails right now, you're worried about day to day. You're not thinking about 5 years from now and having to make a massive investment in upgrading your infrastructure so that you can compete the way that customers want you to.
Yeah.
And so it's not hard to imagine 5 years from now a lot of people needing life rings thrown into the water to help them out.
That's an interesting point. I'm even thinking about blockchain, and I know that's been like, that AI and drones. It's like every conference for the past few years. But blockchain sort of allows the right solution at the right time to come in, get the information it needs, provide the information that needs to come out of it, and the whole thing's seamless. And you don't even need to know who's doing what, where, when, why. It just happens. And so this picture you're painting where it's data and computation around that data and the capital flows where it needs to flow.
Yeah.
Blockchain seems like another enabler of that if it ever really takes in the industry.
Yeah, I was going to say, it's something. I have a small team of data scientists that do a lot of ML work, and part of that team also pays attention to both industry and blockchain more generally. And intellectually, I'm with you. It hasn't happened yet.
Yeah.
We're paying attention to it, just in case. I guess, the thing that I take away from what I've seen be successful so far that's intriguing is more, I'll call, an ecosystem approach.
Yeah.
So, you think about Toyota's block, where they go from every manufacturer, every part, to how it gets shipped, to where it gets shipped, to how it goes into the car, where it goes into the car, when it goes into the car. And when that car comes off the line, what ship it goes on to, what port it ends, everything.
Yeah.
Including the whole registry of every buyer and owner of that car and all the service records thereafter. Like, that's intriguing to me. If I have a part failure, I can trace that now in a way that I never really could before, or at least not really effectively. And probably a more intriguing example to me, I forget the food wholesaler, but they implemented a block for crops coming out of the field.
Yeah.
And part of what they were trying to solve for was, we have salmonella or some toxin coming out of, so destroy 50 metric tons of lettuce.
Yeah.
And their block is able to tell them instantly it came from that corner of that field and went on this truck, and now I can destroy a much more realistic amount of produce and keep everybody safe.
Yeah.
So it's this kind of ecosystem. There's Risk Alliance or Risk Block in the insurance industry that's looking at ID cards and some subrogation use cases and FNOL, and those really resonate with me. I mean, you think about the waste factor on subrogation with insurance companies just sending checks literally risk by risk to each other, relative to like banks aggregating and doing,
Right.
overnight
The
reconciliation.
clearing transaction.
Doesn't make any sense, and so that's just pure waste.
Yeah.
That I think is a real ripe ecosystem use case for blockchain.
Yeah.
And hopefully,
Rose Live
we'll
at
see
least.
that. What's that?
State Farm and USAA have their subrogation blockchain solution that they've made.
That's part of that group. Yeah, we're actually trying to elbow our way in, to participate with them in that. And we've had a few phone calls. So yeah, I think but if you think about it, it's not an ecosystem today. It's just two people that figure out how to work together.
Right.
The beauty for all of them, the savings isn't, USA versus State Farm.
Yeah.
It's 80% of the market playing in that same ecosystem that reduces everybody's costs.
Yeah, that's all part of, I mean, I guess if it's subro, it's not in the 30%, but there's a whole financial machine that you're keeping up and running that can be more efficient, can be spending.
No, but that's in that 12 to 15 adjustment expense.
It's in the LA.
Absolutely.
Yeah.
Issuing checks and processing checks.
Or it's leakage because it was too much work to get it done, where actually like there is an owner for that risk, so it needs to go back where it needs to go back to. And wouldn't it be nice if it was easy to do that? No, I think those are the internal uses of blockchain, maybe are where it will be more successful first before it becomes an outward facing thing. But maybe it's not 5 years, but at some point. That's why I say, like, I like talking about 50 years out, because then there's all kinds of fudge room for if I'm just totally off on things. That's okay. That's my secret. I've given it away. Greg, I wonder if we can leave on a bit of a leadership note, if you will, because you did talk about this period where, starting out 5 years ago and this sort of, this strategic imperative. And what it took to get there. And you and I have talked about this before around, you can belabor the return on investment, return on capital, business case, which is all good stuff, but you can get stuck in that piece and maybe make a tactical or minutia focused decision because of how the dollars flow and miss the unlock. And I come right back to what you've been able to achieve from a growth and expense standpoint, which is not normal. So is there a lesson that people can take in that brings more of that, look, this is a strategic imperative versus we need to scrutinize the nickel and diming, which means we may make a different decision than we should have made?
Yeah, I mean, I think the getting the strategy right and getting it communicated helps really galvanize people. The one thing I'd say at State Auto, where we are culturally as a company now is very different than we were 5 years ago.
Yeah.
The polite term we used internally was healthy skeptics. There was a lot of people that said, if I'm giving you the benefit of the doubt, you guys have been successful in other careers, but this is not that, and I want to see it before I believe it. I think the thing that we did probably better than anything else wasn't any of the nuts and bolts or technology. It was really focusing on culture and people. And for me, with my IT or my real estate or my service org, was really just getting the right leaders in place. I forget where I heard it or read it a long time ago, but somebody said, you take care of the little stuff and the big stuff takes care of itself. Yeah. Well, if you get the right leaders in place who have the right mentality around taking care of their people, a whole lot of other stuff kind of follows in train. And that's the one thing I'm probably most proud of. We just got we do an annual engagement survey that's only, I think, 12 questions. And I was just talking to one of our board members about it earlier today. It's not uncommon to have an 80 whatever percent response rate on those questions.
Yeah.
I think as a company with over 2,000 people, we're at 93, 94% response rate, which is good.
That's good.
But if you look at the 12 questions from my org, 9 of the questions, favorable, unfavorable, bucketing the 5-point scale, were 95% or better. Would you recommend state audit to somebody else? 98% people. I mean, there's nowhere to go up. It's just the highest engagement scores I've seen in any company I've ever had the privilege of working with. And I think that's the culmination of a lot of years of focus on the personal development and security of our teams. I just saw something yesterday where 67% of P&C carriers had furloughs or layoffs. We never even had that conversation, which is another thing you get out of a growth organization.
Yeah.
So yeah, that's the technology gets a lot of hype and a lot of talk, but it's people that make all these things happen, and getting the right people and the right culture goes a long way towards driving the ultimate strategy you're trying to get to.
Yeah. Well, look, that resonates with me, and that's some of the hits I took on my book were from people who said, like, I thought you were going to tell me what tech I should be investing in. No, it's about your customers and your staff. And I am a little bit stuck on how short your engagement survey is. I think the last one I took was like 65 questions, so I'm just jealous. Maybe that's why they're so engaged, because it's a shorter survey, but that's fantastic results. And I think
it's probably, there's a whole science to it. I learned in business school, but I'd say every company I was at, by the time you got, 30 minutes into that, you wanted to pull your hair out.
Right.
And you just start picking the middle box, so, and I get that they're trying to, see where people answer different things over time. We really treated it and really pushed as a leadership team, because we did have that. That was the old survey.
Sure.
Look, we're going to do this. It's more important to have a 90% versus a 50% response rate.
Yeah.
And it's easier to make the sale that it's 2 minutes of your life, go do it.
Yeah.
We want your voice to be heard. We want every voice to be heard. So it was very conscious decision to go to a really skinny down version. We added a question this year, which we're usually pretty hard on not adding any questions or scope, but we wanted to gain some insight into people's feelings on how we led the company through COVID. So that was the one question we added this year.
Good one to add.
Yeah.
99%,
by the way. 99% of the company was favorable to how we responded to COVID. It's unbelievable.
Yeah, that's really good. I have some friends and colleagues at State Auto, so that's what I've heard from them as well. But it's good to know also that that's a mentality or mindset, a constituent that's being thought of and taken care of. I think it's a great place to wrap things up, and I do really appreciate the time, and that's the note we get to end on. It is always said, like, it's a relationship business, it's a people business, people is all we have. It is true, and with all the focus on the amazing new technology and data and computational power and IoT and all and any buzzword you want to throw at it, it's still ultimately people delivering it. So I love that we end on that note. Greg, thank you so much for the time today.
You bet, Brian. My pleasure. Take care.
Thank you to Greg for joining for that episode. Really good conversation. It's so interesting. There's a lot more to the State Auto journey, obviously, than we can squeeze into like a 30-minute conversation. But to go from where they were at to where they are, and the growth that's enabled, and the leverage in their efficiency that's created, that's a pretty profound story. If you haven't dug into it, hopefully this is a good little teaser to get you started, but it's worth pushing. It's worth looking and go search, find some more stories on it, because they really have done some pretty forward-looking and forward-acting things at State Auto, and it's really cool hearing Greg's firsthand account of all that, like right from the midst of it. So again, thank you to Greg for coming on and sharing a bit of their journey and how things look going forward, especially with the kinds of capabilities that are enabled by the new computing power and the technology that is available to all of us if we're willing to embrace it. So thank you, Greg, and thank you to Medallia for making this episode possible and the rest of the episodes this season. They've been a huge support. Thank you to all of you for tuning in again. And I hope that you have subscribed. If you haven't, definitely hit the subscribe button. If you're on YouTube, hit that little bell so you get the notifications as well, and you never miss another episode. Make sure you go to future-of-insurance.com to get updates and find out more about the books, about this podcast. It's a great way to share it. You can just send someone a link right to that site, and there's a little podcast link right at the top of the page. Learn more, find out more about what's going on in this space so that you can help push the industry forward by taking in these lessons, these insights from lots of different contexts, bring them into your world and see how you can do better or do differently. All right, I hope that helps push you ahead so you can help push the industry ahead. Thanks, everyone. I'll see you next time.